How do you guys think about that question?
I guess you want me to take this one first?
Go for it. Yep.
So when you think about a store of value asset, that asset has certain parameters as a store of value that make it advantageous to store value. And if we look at the old world, we can look at a couple different classical stores of value like real estate, gold. And I think those, when you look at those and you combine those with, fiat currency and art and others, you're looking at a very, very large TAM. Total addressable market, by the way, is abbreviated as TAM, or however you want to call that. So the TAM for Bitcoin, I would say, is all stores of value. It is a contender to compete with. People forget that real estate is a $250 trillion US dollar store of value. Real estate has maintenance costs. You have property taxes.
It also keeps you sheltered from the physical elements, which is nice.
That's true. It does serve some utility there, but the utility is costly. A lot of people park. So you've got very wealthy individuals and they have X amount of dollars or euros or yen. And where do they park that money? Well, they buy London real estate. They buy New York real estate. They buy San Francisco real estate. But that's a very costly way to store value. I think there was some crazy number about New York, Manhattan real estate where I'm coming up with a number here, but I think it was double digits percentage is just used as a store of value. No one actually lives there. Connor Brown actually wrote a really great article on this, which is that Bitcoin has no other utility as a store of value. And that's a good thing because its raw utility is being a good store of value. It's not a dual purpose asset like gold is also used for electronics, which some claim is an intrinsic value, but that's not really the case. It's actually convolutes its original purpose as a store of value. Real estate is somewhat the same. A real estate asset should not be somewhere where you park wealth. Think about it. Like we don't park wealth in our cars. Those cars have maintenance costs and they wear and tear. I mean, we should be building as much supply as demand requires to go build new apartments and houses. And so really, I think that Bitcoin as a store of value competes with all of these stores of value, not just money, not just the classical version of what we view money as.
Huh, interesting. Pierre, what do you make of that total addressable market for Bitcoin as a store of value?
Yeah, I would actually, I'd go even further in that even things like stocks now, people use as a store of value because first of all, the markets have become very liquid and you can have, Robinhood, you can have your Cash App and you can be buying stocks there. And then also there have been products that have been built of these low cost index funds, which allow you to just buy the market and not really care about active investing. And so now people do treat the S&P 500 index as a store of value in the sense that that's where they park money while they're waiting for whatever uncertain future cash flow. And I think that this has been a trend driven by monetary policy where holding cash got punished with inflation. Okay, so you go buy a money market fund. Now that is yielding like 1%, which is not keeping you up with inflation. You got to go further out on the yield curve, and eventually you're in the stock market, and it's really a short-term vehicle for you. And I think we saw that with the coronavirus pandemic, where people wanted to get their savings and cash out their stock portfolio, and that caused the market to really tank far more than maybe the fundamentals would have done for it. So I do think that like assets, broadly speaking, whether it's the public stock market, but even private companies, private equity, across the board, assets have become very overvalued because they've acquired a monetary premium, essentially, of people holding them as money. And so I would expand the TAM beyond real estate, even to financial assets, whether it's stocks or bonds.
Huh. Interesting. Next question is shifting gears a little bit here from Travis Wilhelm. This is more about the design of Bitcoin. So obviously with the halving coming up, we're seeing a programmatic reduction in the new issuance of Bitcoin. Why do you think Satoshi picked 21 million as the cap? Is there a method to that madness? Travis Wilhelm asks.
We don't have an answer to that. It's very easy, I think, to like try to put words in Satoshi's mouth, but he just hasn't uttered the words as to why it was 21 million specifically. My understanding is that it's actually an outcome of the math, much more so than he picked 21 million and then reverse engineered the halving math to equal that. The other part, I think it hits a reptilian spot in the brain. For some reason, that number 21 is, I'm not a numerologist or an astrologist, but I do think that it hits a numerical Schelling point for people of being high enough, but not too high.
So you don't think he just like really liked blackjack? That was just his favorite game.
Blackjack, or he was too young to drink, and in the U.S. the drinking age is 21, and so that's what.
We don't think that Satoshi could have been a child. So it's on not disproven theory.
Child or alien.
Dan, what do you make of that 21 million? Does that matter? What's your take?
So from my understanding, and I'm not an engineer. I don't work with.
You are a Satoshiologist, right? You're
a little bit. I've delved into it a little bit, but a lot of this is up to interpretations, a little bit subjective. People can piece together their own narratives. So what I like to focus on is where he put the decimal. Why 21 million versus 21 billion or 21 trillion? That I think is a little bit, a little bit of a derivative of the original question, but I think it's kind of a fun one. And it was kind of funny because I think Satoshi wasn't sure if Bitcoin was going to break dollar parity. I think which by the way, he uses he as his self-identified pronoun on his profile. I believe that he didn't, had pretty low expectations for Bitcoin off the bat. Bitcoin didn't have, people forget that Bitcoin did not trade or have a value for a year and a half. So I think the decimal was put there at 21 million because it could break dollar parity and then subjectively be worth something in people's minds. Whenever we have Dogecoin, a lot of us played around with Doge back in 2014, including myself. It was fun. You felt very wealthy. You had millions of Doge. You felt like a king or a queen, but you don't value it as much when it's worth so little. And I think that Satoshi, he very much understood kind of human behavior. He basically plugged greed into Bitcoin's adoption model. He hypothesized that as the price increases, people become aware of it and take advantage of that increasing value. He's literally describing FOMO before Bitcoin's worth anything. And so I think that the decimal was chosen because it breaks dollar parity, it becomes real in people's minds, and people start to chase after that scarcity.
I got a bit of a riff on that question. Could you imagine Bitcoin without a halving? And what are the benefits of doing the supply cuts all at once rather than gradually, right? So what's the point from going from 12.5 to 6.25? What's the point in making it a supply shock rather than a gradual reduction?
Yeah, so it's definitely possible that the number of Bitcoin being created would decrease with each block rather than at very long intervals. I think that it was easier to program to have it at intervals than it was to have it be in each block a different number. But in practice, I also think that it has had a significant effect on the market cycle in Bitcoin and giving it that 4-year cadence where the bull and bear, human animal spirits come out. And without that, I think that maybe we would have much longer cycles. And thus, because Bitcoin adoption very often is driven by volatility, that we would actually have a slower adoption process for Bitcoin, whereas these 4-year cycles that arguably are caused by the strong, halvings, it's accelerating things.
Yeah, it's so interesting when you look at Bitcoin. There's so many small details about it that you wonder whether there was intent in it or it was just happenstance. Stan, what's your take on that? So do we need these supply shocks? Could we have had something else? How do you look at that?
Yeah, so I agree with Pierre's assessment where he talked through how Satoshi made that decision, because some people argue that he made that decision because it was a coding sort of issue where it made it a lot easier to do it that way versus continuous with each block, or much more gradual. I think Satoshi, again, fundamentally, he was a polymath. I mean, when we look at how he architected the game theory, his understanding of history, and just kind of how he wove and built this, also staying pseudonymous, creating this mystique, and all, and the way that he talked with everyone on the Bitcoin Talk forums, he never got really angry ever. I mean, to see this precision and to see all these different factors woven in together, where he must have read about Nick Szabo and all these others with BitGold and B Money and all these precursors to Bitcoin. I think the halvings are intentional. Um, I'm coming from this from a product mindset. When you build product, it takes a lot of time. You go, you build, you iterate, and you go raise money, you hire people. That takes a lot of time. And 4 years, coincidentally, syncs up with US election cycles as well. We give 4 years to a president, and in other countries, I'm not as familiar with sort of the duration, but 2 to 4 years seems very typical. We typically give these leaders 2 to 4 years to make a difference, to make something happen. With startups, they raise money and they execute for a couple of years at least. And so we give companies and leaders that much time to make a difference. And I think with Bitcoin, through these halvings, it allows companies to go build that infrastructure for the next bull run. So I think that gives us a nice gap to not only have a supply shock that induces a more volatile market, which then brings in adoption, but then afterwards gives us time to go rebuild and be ready for the next wave. I think this, and hopefully I don't front run one of the questions here, but I guess this is good because we might answer it right now. A lot of people ask, is the halving priced in? I think this is a very common question. And, I think the question originally posed here is very tangential to this. So I believe that the Bitcoin halving is priced in for all of us paying attention, but to the 99.9% of humans on Earth, they don't care about Bitcoin. They don't pay attention to the monetary policy, and it has not been priced in. And
Yeah, I
so,
think when people ask, has Bitcoin been priced in? I often think of the question as do people understand Bitcoin, right? It's essentially asking the same question.
yeah, so that's my 2 cents on it. Not many people understand kind of the Bitcoin's momentous moment here, where the supply issuance is cut. They don't really pay attention to their own existing monetary policy. They just go to work every day, they pay their bills, and they don't really think about this. Bitcoin's price essentially reflects the aggregate shared belief in it from the people who cared enough to look into it.
So once again, everybody, thanks for the questions. Keep them coming on the Q&A button. I'll be taking ones and posing them to our panelists here. So we've got one from Shane Vitarana. What are your thoughts on tokenized Bitcoin, right? So this one of these things a lot of these other cryptocurrency protocols are doing is they're trying to replicate Bitcoin as a program on their systems. Do you think that will play a big role? Do you think that will have utility? Do you think Bitcoiners will use them? What's your take on these synthetic Bitcoin assets?
Yeah, so I think that whether it's tokenized Bitcoin or synthetic Bitcoin, but even layer two solutions that you hear Bitcoiners excited about, like Liquid or Lightning, you have trade-offs versus the plain vanilla on-chain transaction Bitcoin. And so whether those trade-offs are appealing to users or not, I think that remains to be seen. It's kind of a market test. But my concern is when the marketing is out of sync with the trade-offs. And so having these things be oversold as trust minimized solutions, when really Bitcoin's trust minimized design is unparalleled. So these synthetic Bitcoins or wrapped Bitcoins have not withstood the test of time. And we have seen on other platforms software engineering issues come up that have caused loss of funds. So I think that people should be really cautious. Now, of course, I'm all for people experimenting with these things. I'm concerned when the experiment is not labeled as such, and instead it is labeled as the future of finance.
Dan, what would you say to the Ethereans out there who think that most Bitcoin will trade on Ethereum as a synthetic asset?
Yeah, so I mean, just like gold, you're free to wrap gold around whatever digital wrapper you'd like to represent that gold, but there's nothing like actually having physical gold or having digital gold settled. The only way to actually hold Bitcoin is, and to settle it, is on the Bitcoin blockchain. You can wrap it, you can do special things. I mean, Lightning and Liquid are some derivatives of this as well. They're sort of, they're levels above layer one. So you are minimizing friction, speed, your speed, you're optimizing for other things, but you're also giving up trust. And so there are, like Pierre said, there are trade-offs with these other solutions.
So the value of the Bitcoin blockchain, you're saying, is
right. The settlement guarantees, through proof of work, after X amount of confirmations, with proof of work and other proof of work chains, there's no such thing as finality. It's degrees of finality. We agree after X amount of confirmations that a Bitcoin transaction is effectively settled. So the settlement guarantee of Bitcoin on layer one is the absolute guarantee of settlement. On layers above that, or wrapped BTC, there are decreasing guarantees of settlement.
Next question here from an anonymous attendee. How do you think the global economic situation we are in now will affect the Bitcoin halving? Is it affecting the Bitcoin halving? We haven't really seen a Bitcoin market, within the context of a larger economic recession or even depression. How do you guys think about that?
I mean, it was incredible to see Bitcoin survive. I've been in the space for 8 years, and Bitcoin has largely developed during a huge bull run in the macro markets. And Bitcoin, I think, performed phenomenally well. Now, when it touched 3,800, that was a series of cascading margin calls where, market makers and others couldn't bring in Bitcoin due to a wide variety of factors, mainly like, you've got exchanges that require X amount of confirmations. Essentially, markets were becoming really fragmented when it touched 3,800, but it quickly rebounded much higher than that. But Bitcoin survived a global pandemic. And so a pandemic of this magnitude has been felt in 100 years. So Bitcoin survived an incredibly, high shocking risk-off event. And Bitcoin survived that with no central bank, no investment banks, no universities, or any other sort of pedigreed institutions to backstop it. It purely survived based on the aggregate shared faith and belief in it from Bitcoiners.
And maybe with a little help from our friends at BitMEX, we'll never know.
Well, yeah, they got DDoSed.
Pierre, same question to you.
Yeah, I definitely think that it is impressive that it has, at this point, completely retraced the sell-off that we saw on March 12th. And I also think that the concerns about everything, all correlations going to one, and Bitcoin's crashing at the same time as the stock market, and therefore it's not a store of value. I kind of, like, it goes back to what I was saying earlier, where the stock market has become a store of value. I think that's the issue, much more so than is Bitcoin a store of value or not. And the context also for Bitcoin's retrace and for the stock markets as well, because the stock market has done phenomenally well, is central bank intervention. And I think that as we see this fresh new money that has been created by central banks trickle down to everyone else outside of the financial sector, that's going to be massive tailwinds for Bitcoin on the demand side, just as the supply is getting cut in half in its flow. So I think that all around, it's very bullish for Bitcoin. Now, that's not to say that in an alternate universe without coronavirus, that Bitcoin, would not have done phenomenally well in 2020. I think that there's no way to run that experiment. But I do think that the reaction to COVID-19 by central banks it's unprecedented. And that is what I'm looking at to drive demand.
Question here from Ryan Davis. What stops big banks and governments from hijacking Bitcoin when they realize its value?
Got to run your own full node, and that's what prevents hijacks in general, and hijinks. And so if you're running your own Bitcoin full node, you're able to verify that when you withdraw your Bitcoin from a bank or from an exchange, that they are actually sending you real authentic Bitcoins. And what does real authentic Bitcoins mean? That's actually up to you. You get to choose what node software you want to run, and whether it ends up being simpatico with the exchange and with the wider ecosystem. That's a different matter. But at the end of the day, you're able to verify all of those digital signatures and make sure that the history of the Bitcoins you're receiving is legit, in the sense of these are real Bitcoin that were created with proof of work. Now, I don't think that any single government or corporation will ever be powerful enough that they can coerce a decentralized network like Bitcoin, where they essentially force all of these node operators to use their software. We haven't seen an attempt at an attack like that yet. So
maybe
that I know of, that I'm aware of, or that I would characterize that way. We have seen people try to hijack Bitcoin's hash rate, and we saw that in 2017 with the Segwit 2x hard fork, and that did not. The game theory on that did not work out. So I do think that Bitcoin, the ability to verify the ledger yourself, is what prevents it from getting hijacked by powerful interests.
Interesting. Dan, same question over to you. Big banks, governments, when they all realize what Bitcoin is and what it does, what's to stop them from getting involved in negative ways in the system?
So what's kind of beautiful about Bitcoin is that as Bitcoin grows larger and larger in terms of hodlers, market cap, aka price, volume, businesses, as it grows larger and larger, it becomes more and more of a threat. But what that also means is that there's more and more holders of Bitcoin. So some of Bitcoin's game theory, or what it protects Bitcoin, is the fact that, let's say 20% or 30% of the US population, I'm using the US because that's familiar to me, I live in the United States. Let's say 20 to 30% of the US holds Bitcoin. If the government were to enact policies that would ban Bitcoin, or if big banks try to, really try to manipulate the price and punish Bitcoin holders, you're punishing 20 to 30% of your population. And if you want to be elected, if you're a politician, or if you're a big bank who wants business, you're essentially penalizing either your constituents or your customers. And so a lot of Bitcoin security comes from people hodling, people owning Bitcoin, now having skin in the game, and they ensure its survival. And I think to Pierre's point, that sort of ultimate iteration on Bitcoin survival comes from people going all the way and establishing their self-sovereignty by running a full node. But just holding Bitcoin alone, I think, is an act that makes Bitcoin more resilient, and it can survive these attacks from big institutions.
So combining a few questions here, one from Olivia Levenmark, and I've seen a few others kind of the same. So people seem to be curious about your thoughts on mining and the risk if the price starts to decline, or goes down or goes up after the halving. Miners won't be able to mine as efficiently as they are now. So I know that's a question that it takes some time to understand. So how do you guys think about mining as it relates to Bitcoin and miner profitability? Is miner profitability something that is important to Bitcoin in your estimation?
So broadly speaking, mining is a very self-regulating system in the sense that there's a lot of different moving parts. One is the actual hardware technology, and so that has been improving over Bitcoin's entire life. Where when people were first mining Bitcoin, they were using a CPU on their desktop computer or their laptop, and then it moved to GPUs, FPGAs, and now we're at ASICs. And within ASICs, and these are chips that are specifically manufactured to mine Bitcoin, the ASICs are getting increasingly efficient. And so because of Moore's law and semiconductors, they're fitting more and more computational power on the same amount of space. So that's just on the chip side. On the electricity side, operators of mining rigs are finding better and better sources of electricity, and by better, it basically boils down to cost per kilowatt hour, and they are trying to find the least expensive electricity in the world, and so you combine those two with then the price, right? And so when Bitcoin's price is going up, there's going to be more demand for hash rate. Now, on the question of how do all of these factors then get impacted by a fourth of the block reward getting cut in half, I think that the first three that I described can very easily hide the fourth in the sense of how much noise they're generating. And so if you look at a hash rate graph, you might actually have trouble finding previous halvings just purely based on what was going on with the hash rate. There's just a lot of noise in that from those other factors. And I think that the mining is hyper competitive. So you've really got to have an edge there. And I would recommend to people who are hobbyists, hey, mine if you find it interesting, but don't expect to be making profits from it. You might read stories about people in the past.
Yeah, I've become to look at that question in a different way. I've almost, it seems like the mining industry kind of goes up and down, but Bitcoin's demand for computation is really the constant, right? We still need to mine these blocks, we still need to batch these transactions, and that's sort of the constant that will keep driving value there. Dan, how do you look at that side of the equation?
Yeah, so I think the TLDR, the too long didn't read, is that markets equilibrate, which means that Bitcoin has a self-regulating mechanism to where as miners hop on board and try to mine Bitcoin, and as miners leave the network because they're unprofitable, Bitcoin has something called the difficulty adjustment, which regulates essentially how difficult it is to mine, aka how difficult it is to make money. At the core basic function, miners purchased equipment, which is the ASICs, and that's their sunk CapEx costs. And then they have ongoing OpEx, which is the cost of electricity. And so miners are perpetually hunting all across the world. They're going to the middle of nowhere, Siberia or Alaska or oil fields in Texas. And they're looking for low cost electricity. And so they scour the earth for low cost electricity, and some of them actually move them in shipping containers. And so by doing that, they expend that CapEx and OpEx cost. And based on how many other people are competing with them or how many other miners are competing with them, they get some percentage of the block reward. The block reward being what the Bitcoin network rewards miners for expending that proof of work. And as profitability becomes less and less or gets really compressed due to, let's say, a halving occurring where the block subsidy, the newly minted Bitcoins, drops in half, and the transaction fees haven't yet compensated for that, miner profitability drops. So when this occurs during halvings, as we've seen in 2012 and 2016, which Pierre correctly highlighted that we don't have a ton of data, but it's still natural to think that as the less competitive miners leave the network, that means that more of the block reward is then given to the surviving miners. So the market equilibrates. It essentially becomes neutral to where whoever survives receives that share, receives a greater share. You also have self-equalizing sort of functions, which are around, let's say I'm an unprofitable miner, and I'm like, you know what? I'm out, my electricity is too expensive. Someone's going to buy my old ASICs at a discounted price. And so that would naturally, equilibrate the system to where a better operation would buy my old mining equipment, and they would buy that at a discount, which would then make it profitable to mine again.
Question here from Mitch. If adoption is the goal, how do we get people to care about things like monetary policy, storing your own wealth? How do you guys get people energized in this discussion?
It's a great point, great question. I have a really, I think, kind of a fun story around this, where a lot of people have seen the movie Inception. In the movie Inception, you have Leo DiCaprio trying to convince Tom Hardy to join his crew, and the crew is going to go incept the idea into this young, this young individual's head. His dad is a billionaire who controls this giant conglomerate of companies, and they're trying to incept the idea that this son who will inherit his father's empire, that he should break up his father's empire and sell off the subsidiaries. In the movie, Leo goes to Tom. He goes, "I have a crazy idea. It's called Inception." And Tom goes to Leo, he goes, "It's not that crazy of an idea, but you have to start with the most root, basic, fundamental part of the idea." And he goes, "We can't start with breaking up his father's empire. We have to start with the relationship with his father. And with Bitcoin, you can't start with Bitcoin. You have to start with people's relationship with their government and with their money. If they don't know what the problem is with their money, then they're not going to understand the solution that you present them, which is Bitcoin." And so I would say the next step in adoption is educating people around what their world is like. Why does this existing banking system exist? Why does it exist? How does it work? How do central banks work? Now, you can't really do this in an easily digestible way. So you have to give them short, kind of quippier takes on it. Like, for example, fractional reserve banking. Your money is not in your bank account. That is a truthful statement that I think adequately describes the scenario. And once they start to come to this realization of, wow, like my money's not in my bank account, then you go, well, there's been a solution developed, which is Bitcoin. So that's my 2 cents on kind of, where we need to start in the educational process.
Pierre, how do you look at that? Does money printer go burr? Is that good enough?
Well, cynically, I think that a lot of people come in because they looked at the price chart and they were like, wow, this thing's going places. It's moving. It already doubled over the past X number of days or weeks. I'm going to be a momentum trader here and jump in. And normally that falls apart because the issuer of the asset would issue more of that asset. And so you have a correction on the supply side. But you don't have that in Bitcoin. So the momentum traders' expectations actually do get fulfilled. And that's what leads to these parabolic tops where it only builds up the excitement, and also if you think about the social networks that are involved, where one friend is making lots of money off of Bitcoin and he's evangelizing it to his other friends. So I think that the number go up aspect of it is ultimately kind of the door in. And then people learn why the value, why the exchange rate of Bitcoin is appreciating. And so I think the education often comes after they are already kind of convinced just by the market process. And that to me is Adam Smith's invisible hand. Like there isn't a conscious ideological effort behind it. It is actually market-driven process.
We got 16 questions answered, still 30 open, but encourage people to keep them coming. We've got another one from an anonymous attendee here. Are there any potential opportunities that you see arising from this halving? Whether that's purchasing, adoption, is there anything that people should look for as an opportunity for themselves?
Doing webinars.
Starting podcasts.
Yeah. Part of the beauty of Bitcoin is it's all automated, right? And so from that perspective, it's a one day like all the other days, where a block comes out on average every 10 minutes. I think that just zooming out, it's more about like, what is the opportunity in Bitcoin, right? And so like people will ask me like, hey, how do I make money off of Bitcoin? And it's kind of ironic because it's actually much simpler than they think. It's that Bitcoin is money, so go make money doing whatever business, you're a doctor or a lawyer or whatever, and park some of it in Bitcoin, and that's how you're gonna quote unquote make money off of it, and having appreciating purchasing power. And so from there, I think that there's also a lot of people who get excited about the underlying technology, right? And so that's where I always recommend people learn how to code. And there's all sorts of excellent guides online where not only will learning how to program get you to understand Bitcoin better, but it actually also increases your earning power, versus a lot of other professional paths. So that would be my 2 cents there is learn to code.
Question off of that, something I've been thinking about a lot. Do you guys think that the average person will still be able to afford to buy a full Bitcoin by the time we're at the next halving? And do you worry about that? Do you worry about the idea that one Bitcoin is maybe $30,000, $40,000? It's something that doesn't feel attainable to people.
It might already feel unattainable at 8,000 or 9,000. If you look at the difficulty people have in terms of having real wages that are outpacing, their lifestyle inflation, but even straight inflation of the cost of healthcare, the cost of college, the cost of housing, all of these are going up a lot, and it has made it extremely difficult for the typical American I focus on, but I know that this has been true globally as well, of putting aside money and consistently, being able to invest or save. So I think that even today at 8 or 9,000, like there's people who, for them, that's like that's already a train that's left the station. We got to move to Satoshi's. Sat's the standards. Sat's the standard.
Dan, how do you think about that? Do you think that next halving the Bitcoin price will just be unattainable for people?
Well, people
will be extinct.
I think the question is kind of like saying, is a $1,000 bill unattainable for people to acquire, of any sort of fiat denomination, right? And it's like, well, the denomination is broken down into smaller units. With Bitcoin, we have Satoshis, which are very, very, very small units. So people can afford to buy thousands and millions of Satoshis very, very easily. So I think that's the long-term standard will be Sats, short for Satoshis. Whereas like owning the whole Bitcoin, I think will kind of be like in the future, if Bitcoin hits like $1 million a coin, it'll be like, oh, you're a millionaire. Oh, you own a whole Bitcoin. Like you're like sort of a millionaire, right? I don't necessarily think that's a hurdle for adoption. We don't think that every American should have $1 million. People will own Sats. They will use Sats. It's a core underlying utility of the entire economy. Will be the store of value, medium of exchange, and unit of account. So I think Sats the standard is kind of my answer to that.
Interesting. Of course, keep the questions coming here. 18 down. We got 35 open ones. We're going to do as many as we can within the time allotted. So I guess I'll ask this one from Reg Poston. What are your thoughts on Plan B's new S2FX model? I guess the way that I would ask that is maybe you guys can explain the stock to flow. I think it's probably the most important theory going in Bitcoin right now is in terms of explaining what the network's doing. Why is stock to flow something that people should understand? And what do you see as its role in the ecosystem right now?
Yeah, so if you take like on day 0 with the first block, there was 50 Bitcoin. So that's the stock. Now the flow was also 50 Bitcoin. So the stock to flow ratio was 1. And then from there, it went to 2 and so on and so forth. And so the stock to flow ratio for Bitcoin has been increasing from the first day of its existence. Now, it gets a big boost at halvings. where now not only is the stock increasing while the flow is the same, now the stock is increasing and the flow is getting cut in half. And so now, whether this has any consequences on the price is currently being hotly debated. There are quantitative models that indicate that there might be some kind of correlation, and maybe so much testing has been done that they think that there's got to be some kind of causal mechanism here underlying it. And we could theorize about what those causal mechanisms are. But the bottom line being that if there is indeed some kind of relationship between the stock to flow ratio and Bitcoin's exchange rate, that would kind of flip things on the head of whether the value of these networks comes from payments utility, which has been a narrative that has been promoted in the past and is promoted today by other projects, that essentially we've got to make sure that these cryptocurrencies are being used for payments as widely as possible. And the stock to flow is kind of contrary to that, where it's basically saying, look, the value of this doesn't come from payments, it comes from scarcity. And that I think is very controversial and rubs people the wrong way. I think the reason it rubs people the wrong way is, and I agree with them on this, is that it takes both. I think that you could not have a store of value that is impossible to transfer the ownership of, right? And that's what a payment is. So I can see that perspective, but at the same time, emphasizing payments for the sake of payments itself does not make a lot of sense when there's so many other ways of transferring value than in kind of the final settlement of the Bitcoin blockchain.
Well, it seems like it's almost coming. I mean, if I remember kind of the earlier economic theories around cryptocurrencies, a lot of it was prioritizing velocity, right? There was the idea that the velocity of money within the system was really important. And maybe this is a alternative theory to that. Dan, I guess, how do you look at stock to flow? Is it the most important thesis right now? Do you think we'll see it proved over the next cycle? What's your current thoughts on that?
I mean, I've got a quote from Satoshi that I think kind of summarizes all my thoughts here. And so this
Are they
is
your thoughts, though, if they're Satoshi's thoughts?
they're not my thoughts, but I think it summarizes well how I feel about it. Okay, from Satoshi, I think the traditional qualifications for money were written with the assumption that there are so many competing objects in the world that are scarce that an object with the automatic bootstrap of intrinsic value will surely win out over those without intrinsic value. But if there were nothing in this world with intrinsic value that could be used as money, only scarce, but no intrinsic value, I think people would still take up something. And he says in quotes, I'm using the word scarce here only to mean limited potential supply.
That's an interesting quote. Huh. That's a good find.
I think it's really poetic in terms of how he's describing scarcity and how humans respond to it. I think what my thoughts on like stock to flow are essentially summed up with that. Plus, as supply decreases, a lot of people go, oh, well, the reduction in issuance is very small compared to the total stock. But you go, well, how much is circulating though? Like there's not that much that circulates. A lot of Bitcoins haven't moved in a long time. And a lot of miners have to forcibly sell these coins because they've incurred upfront OPEX and CAPEX to produce the coins through proof of work. So I think what it does is it increases the demand inelasticity. So essentially, as demand for Bitcoin increases due to the reduction in circulating supply, that makes it more volatile. And that volatility, as Pierre mentioned before, brings about adoption and awareness. So I think that scarcity here is a huge component of that. So Satoshi highlighted it early on. Stock to flow, I think, is a really interesting way of modeling that out and looking at it from a different angle.
Interesting. Moving from theory to, I guess, something more artistic, this question from an anonymous attendee. How important are memes in the Bitcoin space? What's your favorite meme right now?
So I think that memes that stick are downstream of an economic reality. You can't astroturf or fake a meme and make it stick. There has to be some kind of underlying truth to it. And so I think that's why the Bitcoin hodl meme has stuck for so long. And even if you go back and read that drunken post from Bitcoin Talk, it is very timely and fresh. It's not like it feels dated by any stretch of the imagination. And so I think that, and there's other memes as well, like not your keys, not your Bitcoin, honey badger, and all of these are reflecting essentially accumulated wisdom over the years of things that have gone wrong for people and how they could have avoided it. And it does create, we say memes, like in corporate speak, you would call like best practices, right? And that to me is what's so powerful about the Bitcoin memes, is that they actually, all of them, I can't think of a single one off the top of my head where I'm like, I disagree with that meme and people should watch out for it. I think that those don't survive.
I was disappointed a bit when I heard that the hodl. I originally thought hodl was hold on for dear life. I was in that camp. So. Dan, favorite meme going right now? Is there a favorite halving meme that you have?
Memes are incredibly important. It's this compression of a very complex topic into something as simple as burr, right? I mean, there's so much nuance with that. Like it's almost like a one-way hash function of all this information, and it's almost impossible. Like for someone understands money printer go burr, versus you going and explaining central banking policy and all this other stuff. And so because people just see the imagery of a money printer just printing unlimited money, it's phenomenal. I mean, memes for humans, which we are, after all, just animals. We are animals that are a bit more highly evolved than just everything else out there. So we have the ability to abstract very complex topics and compress that into something in one sentence, which is phenomenal. So memes represent that. Money printer go burr, I think, is phenomenal right now. For the halving, it's an incredibly opportune time with Bitcoin in terms of the halving coexisting with one of the largest macro events in my lifetime, and I'm in my 30s. This is a pretty wild event to occur. So money printer go burr, I think, reinforces the unlimited supply of fiat chasing 21 million Bitcoin. I think my favorite meme of all time, of course, is HODL. HODL represents, I think, something much more than just Bitcoin. It's not just hold on to, it's not just HODL Bitcoin. It fluctuates a lot. HODL is about being convicted in something. You shouldn't buy any asset out there if you're just going to go immediately panic sell it the first time it drops, or sell it the first time it goes up 10%. To HODL means to believe and to hold and to be convicted. This world is full of very fleeting sort of relationships where people are looking at, what's the minimum amount of effort I have to put into a relationship or commitment. And HODL forces you to kind of look inside yourself and go, well, what am I willing to expend in terms of time and energy and effort to commit to something? And so I think HODL can be extrapolated outside of Bitcoin to any other investment, and then also to everything else in life, which, HODL the things you care about, HODL the things that you really want to spend time and effort and to be around. And so that's what HODL means to me.
Interesting. I guess looking a little bit more forward here, what's an open question you have about Bitcoin that you hope will be answered by the next halving?
Oh boy, that's a tough one. I think that one open question is around how Bitcoin's financial layer on top of it is going to evolve. And I think that there's, again, back to the meme of not your keys, not your Bitcoin, that would really minimize the financial layer on top of Bitcoin, where people are not lending out their Bitcoins to anyone because they feel like the credit risk is just way too high. And yet, I saw another question, was about Bitcoin lending. And so there clearly has been a financial market that has developed as a secondary. I wonder if there are additional ways of having trust minimized finance on top of Bitcoin. So, for example, some companies offer collaborative custody with multi-sig, and then they provide that as collateral for people who are borrowing fiat against it. So I do think that an open question is, will Bitcoin's financial layer actually leverage the crypto primitives that it has available to it, or is it kind of just going to be a janky recreation of the existing financial system, except with a better money underlying it?
Sounds like a great advertisement there. Jankier system. Dan, what's your open question? What are you still wondering about the mysteries of Bitcoin, and what do you hope you'll have solved?
Yeah, I mean that's a really good question. Pierre brings up some great points around, as we see lending and borrowing be built on top of Bitcoin, do people extend that to the smart contracting capabilities that Bitcoin has, or are people fine with CeFi technology, centralized finance, like BlockFi's or those sort of companies where they're able to, they don't really have any sort of new unique encryption techniques that they use to take that collateral and transparently convey how much they have, et cetera. I mean, Kraken is the only exchange ever to do proof of keys. To where we proved that we had the X amount of coins that we said we had. And Kraken's the only exchange to do that, which is pretty wild considering that this is crypto, and I thought we were going to build this new financial system that's much more transparent. But customers aren't, they're not clamoring for Kraken and Coinbase and Bitstamp. They're not clamoring for them to prove that or get audited or cryptographically prove that the assets that they claim that they have are there. And so that is a little bit troubling of a sign to see that, like, at a core basic level, people aren't even asking exchanges to be audited. So that's a little bit scary, to where, there could be even greater financialization with the lending and borrowing side, and we could see a large borrower default on a debt, or we could see a sort of daisy chain where a couple different borrowers default, and that causes a collapse in the system. But ultimately, that base layer is stable and sound. So Bitcoin will survive that. It just depends on the financial products built on top of that.
So I guess distilling that down into a question, it sounds like you're saying that you're curious whether people will come to value the transparency of the system. Is that?
Well, people, very few people, a lot, like even getting people to run a full node, or not their keys, not their coins, like those, we try to push that narrative, but for a lot of people that's too complex. So for them to start like pushing exchanges to be more transparent, that's even like I would say a level of effort above that. We don't really see customers clamoring for that. My hope would be that we would see something very regular, where exchanges would essentially regularly publish, essentially that we have these funds that we have. That would be a very basic function. And I think to Pierre's point, there's more complex things where, like, there's collaborative custody, where there's 3 keys, and my Bitcoin I deposited to borrow dollars against that Bitcoin. I know that, for example, Unchained Capital is a company out there that does this, but, Unchained has a key, there's another key with a law firm, and then I have a key, something like that. We don't really see customers clamoring for that. And I think ultimately, when we build products and protocols, from my product perspective, you build what the customer wants. And the customer isn't really necessarily clamoring or really wanting these sort of very, very strong guarantees against fraud or over leverage in the system. So that does scare me as well. Luckily, Bitcoin in its original TAM, being a store of value asset, it is trending very well along that path to becoming that digital gold or that digital store of value. And so no matter what financialization is built on top of Bitcoin, Bitcoin itself will still survive. And Bitcoiners who hodl just Bitcoin itself without engaging in any sort of lending and borrowing practices will always know that their keys, their coins.
Yeah, someone who only recently took their coins off an exchange certainly can identify the consumer hurdles there. Question from Drew A. What is a high time preference purchase you are considering during the next bull market? Are we going to see a Lamborghini in your driveways in the future?
No, not a Lamborghini. At this point, it would be more of like a those Bobcat construction vehicles. So kind of a small utility construction vehicle. Not for myself, but for my son. He is very excited about construction vehicles. So that's probably the route I would go rather than a Lamborghini at this point.
So your goal is to buy assuming that your young son an actual Tonka toy he can play around with.
Yes.
Dan, how about yourself? Are you going to be selling any of your Bitcoin at the top? And is there something you have your eye on as a consumer purchase?
Well, if you hodl forever, by the way, if you just lend out a small percentage of your coins, you are taking on the risk that the borrower of those coins could default, but they do pay you an interest rate. So technically, you never have to sell.
Sounds like a good introduction for someone who was clamoring for you guys to fight about BlockFi.
Now, everyone lives a finite lifetime. So you're going to hodl till that amount means a lot to you. Hopefully you hodl enough to where you feel that you didn't miss out on Bitcoin, but maybe you're X years old and you have a family and you want to buy a house or something. So everyone has a point to where they'll sell Bitcoin. I think people, when we talk about hodl is important. I think people should look at the things that they want in life and plot their investments alongside that. When it comes to a high time preference purchase, I think for me, I'm pretty young, and I think it'd be cool to go around the world and go on a very expensive vacation. Let's put it that way.
All right. Yeah, we'll see you. We'll see you there, I guess, when you're sailing around the world. I guess we'll talk a little bit about Bitcoin as a savings protocol, savings technology. What are your guys' thoughts? This is a question from Evan Herman about extrapolating that further. Do you see Bitcoin and by extension other cryptocurrencies as an offset for retirement? Is that something that you would encourage? Is that not something we should encourage? What are your thoughts about thinking about Bitcoin as a retirement tool?
Yeah, so it depends again on kind of what your age is, first of all, because that'll tell you how much risk you can take vis-a-vis retirement, and also what your retirement goals are, right? Are you trying to retire early, or are you going to be retiring in 40 years? Because Bitcoin has very long cycles, and so if you're wanting to retire next year, then I don't think Bitcoin can help you, because there's not really any way of us being able to tell you, okay, in 12 months, Bitcoin's going to go up 10x and you're going to be able to cash out and just live off of the money you made from the capital gains over 1 year. Now, if you look at it like longer term of, I'm going to accumulate Bitcoin over the course of the next decade of my career. I'm going to buy a little bit every week and dollar cost average in as I get my paychecks. And at the end, here's kind of the dollar value that you're expecting in your head. Now, the tough part is kind of forecasting what that's going to be, because Bitcoin is so volatile. You get into very wide ranges if you go the further out you go. But I think that if you kind of approach it rather than from a quantitative way of how much retirement income am I trying to get, like that's how financial planners think about their retirement part. With Bitcoin, I kind of look at it more from first principles of, look, this is a way of hedging against uncertainty. And between now and you retiring is going to be the most uncertainty in the history of humanity. Because I think that the amount of uncertainty if you look at human history, has actually increased over the years rather than decreased. And I get that might be a controversial point for the Steven Pinkers of the world who think that everything's getting better all the time. At a macro level, maybe things are getting better all the time, but at a micro level, your job might get replaced by AI, or any number of other uncertain future cash flows may occur. And that's where I think that you've got to have a savings technology that has Bitcoin's properties and is not reliant on centralized third parties.
So you're saying all of your retirement money is in Bitcoin, or most of it?
Yes, in my case, yes, because I plan on. I also I would also question whether everyone should be retiring or not. Like there is an argument to be made for enjoying life and also enjoying creating value in society, and doing that kind of precludes the typical go play golf with your buddies for the next like 20 or 30 years. So I do think that retirement has become a bit of too much of a cultural trope, and not enough thinking what actually makes people happy.
Huh. Interesting. Yeah, I guess we'll have to do this podcast again in 40 years. Is that good for you? Like, but Dan, how are you thinking about that question? Retirement, obviously something people think about. It's become a mainstream financial concept. How does Bitcoin fit in that for you?
Yeah, so when you hop into those retirement calculators, there's always that sliding bar where they ask you about your risk, and then you plug in your age and you plug in how much money you'd like to have in retirement. And I'd like to retire. I'm 30, and I'd like to retire at age 65, and I'd like to make $100,000 a year, and X, Y, or Z. I mean, what they're really asking is, how long do you have? How long do you have to compound return your savings, and what's your riskiness level? And when I look at Bitcoin, Bitcoin was planted in the middle of the 2008 financial crisis as an antidote to poor central banking policy. Bitcoin is an incredible hedge bet that comes with the added benefit of incredible risk reward. Like when you own Bitcoin, yes, that one Bitcoin could go to zero, or it could 10x in terms of its US dollar value. That's a phenomenal sort of asset to hold in your portfolio. Your portfolio's got its stocks and bonds and real estate and everything else in there that are normal and somewhat you feel safe because it's understood. I consider Bitcoin to be a reasonably safe investment if you have a long time preference. You don't have the short-term time preference where you need the money tomorrow. If you look at multi-year returns for Bitcoin, they're phenomenal. When I first heard about Bitcoin, it was $10, and now we're close to 10,000, and that's only 8 years ago. So, you annualize that return, it's phenomenal. People zoom in on these short-term cycles and are like, oh man, it dropped 30%. I'm like, well, we don't have this anxiety with the stock market. We know long-term that the stock market does well. Now, I'm not saying that's what the stock market will do in the future, but if people perceived Bitcoin with the same, institutional buy-in from trusted people, then people would look at Bitcoin, I think, very rationally and go, this is a part of my portfolio I should have. Now, what percentage of your portfolio? That's up for each person to decide. How much risk can you take on? What sort of tolerance do you have for these wild price swings? I think these are questions that you have to ask yourself when you go allocate your assets into Bitcoin.
All right, it's 15 minutes to go here. I'd like to thank all our participants who are continuing on. We've got 60 people on the channels here asking some great questions, 30 open questions. Not sure we're going to get to them all, but put in your best last question here as we wind down. I'm going to ask another one from anonymous attendee. I'm not sure if this is one anonymous attendee who's asking a bunch of great questions, or there's many, but I guess I'll distill his question. How do you guys think about alternative cryptocurrencies outside of Bitcoin? Have we seen any succeed? And do you think by the next halving, we might see an alternative cryptocurrency succeed? What is the definition of success there for you? And the way that the question here is phrased is what is the scope of shitcoinery that we will see following the halving? But said another way, I guess, what is your current thinking on, quote, alternative cryptocurrencies?
The temptation to print money by humans is an irresistible temptation. So there will always be shitcoins. There will always be altcoins. 99.9% are trying to mimic the wealth effect that Bitcoin brought. They claim to have these other attributes, but really it's more of a Black-Scholes model, or it's a pathway of finding every narrative that resonates with a certain small segment of people. Oh, you like file sharing on a blockchain? We got that. You like Airbnb on the blockchain? We got that too. And so 2017 was a great example of all of these narratives that were trying to simply mimic the wealth effect of Bitcoin by claiming each one of these blockchains had a better value to do X, Y, or Z. When we look at blockchain technology was built to build Bitcoin. There's a very small surface area of functional capabilities that a blockchain can do. Blockchains are very, very terrible at almost everything, but they're good with Bitcoin. And there's a reason why. There's always trade-offs when you build something. I don't go build a tank and then I use the tank as a ride-sharing vehicle. It's a very special purpose-built vehicle, and blockchain tech was special purpose-built to build Bitcoin. So for me, I don't really see, I've been through the 2014 and the 2017 altcoin bubbles. I feel that people are free to speculate as to what might be the next thing, but I've seen 10,000 cryptocurrencies come and go. I feel like an old man. I haven't seen many that I would consider, really good applications of blockchain tech outside of Bitcoin.
Well, I guess contrarian opinion. What about Tether? We've got there's dollars working around a blockchain. Millions being traded, facilitating a global crypto commerce. That's not good enough for you.
Well, these things work until they don't, just like we found out in the 2008 financial crisis. Tether is centrally issued. So all it takes is a state to lean on Bitfinex and Tether, and we could see it disappear in a second. So same with all these other centralized stablecoins. So I think people need to understand this when they interact with these stablecoins. If they're centrally controlled, as Satoshi says, I hope that everyone understands that these currencies before Bitcoin were doomed due to their centralized nature. And so with stablecoins, they do serve a very good purpose until we have states lean on them, or we have negative interest rates. So a lot of these stablecoins, they make money based on the fiat deposits that they hold. And as soon as those are negative, the profitability mechanism for stablecoin issuance becomes a little trickier.
Pierre, alternative cryptocurrencies.
Yeah, I would even hesitate to put Tethers in that category. To me, Tethers it's USD, it's wrapped USD, let's call it, and you can have like the USD you have at JP Morgan Chase is also wrapped USD, and so whoever is the specific person doing the wrapping and what color of wrapping paper they're using, it's still USD, and so you're still taking on, in my view, the dilution risk of what the USD central bank is doing, right? The Federal Reserve, and so I hesitate to call Tethers. And now I know that there are other stable coins that are doing things a little differently, where they are, not necessarily even targeting USD, like there's targeting a specific purchasing power and whatnot. I do liken it to essentially a perpetual motion machine in physics. It's the economic equivalent of one, where we're going to have zero volatility and we're going to have value. And I actually don't think that's mathematically possible, or it's not economically possible to have such a structure and not have it blow up eventually. And so that's on the stablecoin side. On the altcoins or alternative cryptocurrencies, I think what Dan said there with trade-offs is really key, is that all of the free lunches where there isn't really a trade-off between properties in the system, Bitcoin eats those. So Bitcoin has had numerous upgrades over its life. Every time there's an opportunity to upgrade Bitcoin and it doesn't carry burdensome trade-offs with it, that opportunity is jumped on. So from that perspective, the success question of what does success look like for an alternative cryptocurrency, to me, it's accruing more liquidity than Bitcoin. And to do that, they've got to overcome it's essentially a network effect of liquidity. And so they have to have a 10x advantage over Bitcoin, just like, in my view, Bitcoin has a 10x or 100x advantage over USD. And that's why Bitcoin has been able to compete with USD in its exchange rate so successfully. And so that problem of being 10 times better than Bitcoin, it's unsolvable if all you have are trade-offs. And so all you're saying is that we're 10 times more different than Bitcoin. Not necessarily better or worse. We're just like 10 times different than Bitcoin. And that's not going to translate into success in the market for monies, because the market for monies is actually fairly simple. Like it's not rocket science what you're looking for in a money. You're sending it, you're receiving it, and you're holding it. Those are the three things. So doing things differently because you now have the ability to have a Tamagotchi on your cryptocurrency. It doesn't really cause a big competitive advantage in the market for monies.
Yeah, interesting thoughts there. I guess anonymous attendee, this guy, whether this is one person or many anonymous attendees, great questions here. We're gonna pick this next one. In the spirit of the halving, at some point, Bitcoin will continue to programmatically reduce its halving rewards down to zero. What do you guys foresee as the environment for Bitcoin then? Obviously, this will be after our lifetimes. So speaking to the future generations who are, digging up this computer file and analyzing our thoughts, how do you see Bitcoin without block rewards? Is this something was solved? How do you think about this today?
Well, Pete, I'm getting cryopreserved, so maybe they'll bring me back to go see what happened.
You'll have to let us know how it is then, I guess.
me and Hal will pop back out and be like, "Hey, what's up?"
Well, how does that work exactly? Do they have you have a freezer picked out, or they just?
Yeah, so I signed up with Alcor. They're the kind of preeminent cryopreservation company out there. You would be really surprised. I know a lot of core devs who have signed up. Pretty surprised to know which Bitcoiners have signed up for cryonics. But back to the question, what happens to Bitcoin when the block subsidy or the newly minted coins goes to zero, which will happen, I think, in like 2120-ish or so, or 2140 or some very, very long time from now. Well, every 4 years, the block subsidy, the newly minted coin, drops in half. Now, the block reward is comprised of the block subsidy and transaction fees. So over time, what we've seen is that as the subsidy decreases, we've seen not an equal, but we've seen a corresponding boom in transaction fees and the cost per transaction. So the number of transactions go up and the fees paid per transaction go up as well. Eventually, this will reach a hard capped limit over how many transactions can be processed per block, which we currently have, but some blocks are still somewhat empty. People worry, what will happen to Bitcoin's long-term security? Will the miners feel well compensated for their proof of work, the CapEx and OpEx, as I mentioned earlier? Will they be compensated with that with a block reward that is enough to convince them to act honestly without them reorganizing transactions? And so what we've seen with data over the last 10 years is that as the block subsidy and the block reward has dropped, the newly minted coins, we've seen transaction fees increase. So the metric that we'd want to look at here, if you're putting on like a product hat, the KPI is transaction fees over the block subsidy. Are transaction fees replacing the subsidy over time? And we're very much seeing that it does. So even as the block reward decreases, the block subsidy decreases in half every halving, we've seen the block reward value in US dollars, which is the appropriate way to look at the security model because dollars are more stable in purchasing power relative to Bitcoin. We've seen that exponentially increase. So Bitcoin security long-term looks fine. Even though the newly minted coins are reduced, transaction fees are slowly compensating for that. And so long-term security looks okay. I think Bitcoin at 21 million, this question might have been more kind of directional towards what happens when you have a fixed monetary policy. And I know Pierre would love to dig into that, so I won't talk too long on it. But in a market where there's only 21 million units of this asset, this kind of core base money, this world reserve currency, the market equilibrates around it. There is no central bank to issue more Bitcoins when there's a financial crisis like the current monetary system does. Instead, Bitcoin becomes that risk-free asset that you hold. When you hold Bitcoin, you don't have to trust anyone else. It's not encumbered by any sort of, it's not a debt. It's not a sovereign bond that you purchase for a government. There's no requirement by the citizens to pay that debt. Holding Bitcoin, it's the risk-free asset out there. So in kind of the final evolutions of where Bitcoin, post-hyper-Bitcoinization, where Bitcoin is now the store of value, unit of account, and unit of exchange, what happens is in a bear market, the price of Bitcoin rises as people sell the riskier assets to hold Bitcoin. Eventually, as Bitcoin's price keeps rising, the aggregate amount of people in the world go, wait a second, Bitcoin's value, which is the risk-free asset, it's basically the boring asset to hold at that point. The value of it has become so high that I'm now seeing opportunities that exist to redeploy that Bitcoin by selling it and putting it into real estate or a fishing company or any other enterprise or asset outside of Bitcoin. So Bitcoin itself equilibrates the economic system through just keeping Bitcoin. Essentially, it's the idea that like we don't need a flexible monetary policy. The world will evolve and move around Bitcoin's inflexible monetary policy.
Pierre, I guess to you, 2140, we're out of halvings. What's it look like?
So even long before that, the amount of Bitcoin getting created is going to be pretty immaterial. And I think at this point, we're already well above 80% of Bitcoin having been mined. And so, really by 2030, you're talking about a very small amount of new Bitcoin being created. And to Dan's point about kind of the transaction finality issue and the security of the system, that part I'm not really worried about, because I think that in the worst case scenario, the damage is very limited to specific individuals who are getting scammed by double spends. And so, and that's in the worst case scenario, which I don't think that it will be there. The reason I say that I'm optimistic is because I think today we are overpaying for security by a lot. And so we never see double spends. The system works incredibly well, and it's just, we don't see, even when Binance got hacked, there was some back and forth about, oh, what if we somehow coordinate the miners, because hey, the miners are centralized, right? That's what everyone thinks. The reality is much more nuanced. And even if there's 12 mining pools or whatever is the case, getting them to agree to a specific course of action turned out to be unworkable. And so I think that even at today's hash rate or at today's mining reward, we're already overpaying for security. Now, on the question of how will a Bitcoin economy work, or how will the economy benefit from Bitcoin, my go-to metaphor is poker. And in poker, when you want the game to go more quickly and you want people to play lower quality hands, what you do is you increase the blind. And that's actually economically equivalent to having monetary inflation, where a politician knows that their election is in 2 or 4 years. And so they want the game to go a little more quickly so that the GDP number goes up and everyone feels good. So a little bit of inflation short term will help them achieve their electoral goals. Now, the problem is that longer term, everyone's playing a long-term game. The only people who are playing the short-term game are the politicians here. And so everyone is being misincentivized to focus on the short term. Whereas with deflation, when the purchasing power of your money is increasing, it's the diametric opposite. It's if you were playing a game of poker where money gets added to your chip stack, or the real value of your chip stack is increasing through the game, you'd wait for the highest quality hands possible. And so that makes for a terrible poker game, obviously, because there's no action. But for an economy, that's what you want, because you want real estate developers to wait for that prime location that they want to build on. And you want aspiring entrepreneurs to wait for the right time to launch their company, because a lot of investment in the economy is very time dependent and you don't want to rush things. And so I think that ultimately the result would be much higher quality capital accumulation. And same thing on the consumption side, right? So inflation causes people to go out and consume much sooner than they want. Whereas if you give them the option to wait a little longer so that they get a higher quality product, a better tourism experience, or whatever may be the case, that you're incentivizing longer term thinking and, frankly, more mindful and beneficial consumption and production.
Last question here. Thanks to the 50 participants still with us after 90 minutes of Q&A. This one from Freddie H. I think it's a fitting one. Also a bit of a Kraken plug here. What ideas have you guys considered for the halving party in Altspace VR? Of course, the halving block drop party coming up on May 10th. Freddie says this has to be lit since it's the first time it's ever been done. Maybe Dan, Pierre, you can give a sneak peek about what you're planning for the big party.
So that's a lot of pressure. First of all, yes, first time. I think that for the first iteration, it's about kind of proving out the concept of let's do a conference in virtual reality. I don't think that that has been done at scale. I don't know how far it's going to scale up. I think that there is a room size limit, but we'll be live streaming to YouTube and to Twitter as well. And so it's going to be a classic panel format, but I think that we're going to have an interesting participant dynamic in the sense that we're now entering a world that, people act differently on the internet as they do in person. And anyone who's gone to a Bitcoin conference and met that person that they feuded with or trolled or got blocked by on Twitter, and they'll have a completely different experience in person. So I think that in the VR space, we're going to have, again, a completely new experience. Maybe it's somewhere in between the in-person or on Twitter, or it's a triangle, right? And it's just something unexpected.
All right, Dan, you got to pump us up here. The Kraken block drop halving party. Why should we be excited?
So we rented blimps all across big cities. We're going to be dropping little Bitcoin flags. Now we moved this to the digital world because we can't interact in the physical. I think we've got some really cool panelists. So we've got a couple different panels, which we've got some rock stars. I think everyone's going to love the topics and who we've got lined up. Some really, really cool stuff. I've got next week, I'm doing a panel with a bunch of OGs.
Yeah, that announcement will be going out soon. So
yeah, we got some really cool OGs where we go back into the day. You're gonna understand what it felt like to be a Bitcoiner in 2012, 2011, 2013, really back in the day. So I think, this having, I think Pete, you might have mentioned this before, with our event, we're gonna take you from the past, the present, and look towards the future. So I think it's going to be a really cool reflection over where Bitcoin's been, where it's at now, and where we're going to go.
Yeah, as the chief planner here, one of the chief planners, I'll settle for everyone just facing in the same direction at the right time. I think that would be a huge win for VR. But thanks everybody for tuning in. Once again, this has been the Bitcoin Halving. Ask Us Anything Q&A with Dan, Held, and Pierre Rochard. Of course, you can find these guys on Twitter. They're no strangers. So if you guys have additional questions that weren't answered here, feel free to reach out to them. Once again, I'm the editor at Larger Kraken, Pete Rizzo. You can find me on Twitter at Pete Rizzo. Dan, you can find him at Dan. Is it Dan Held or Dan Heddle?
It's Dan Held.
Yeah. At Dan Held. And then it's at Pierre_Rochard, right?
And that's right. And my DMs are open for questions.
And once again, you can find us at Kraken FX, and we hope to be doing more of these webinars. So I hope you guys enjoyed it. Feel free to offer us feedback, and good night, good luck, and all right. I think we're done.
Thanks, guys. Bye.